What if you could turn $10,000 into a life-changing amount of money? What if you could do it with a simple, proven strategy that the world's wealthiest people have used for decades? Today, we're going to look at what could happen if you invested $10,000 into three of the best index funds that Fidelity has to offer. We'll examine the historical data, project future growth, and reveal the incredible power of compounding. This isn't just about numbers, it's about your future. It's about financial freedom. So, if you're ready to see how a single investment could change your life, you're in the right place. Let's be honest. Investing can feel overwhelming. There are thousands of stocks, funds, and strategies to choose from. It's easy to feel paralyzed by choice, worried about making the wrong decision. But what if there was a simpler way? A way to invest in the entire market with minimal costs and a proven track record of success? That's where index funds come in. And Fidelity, one of the largest and most respected names in the industry, offers some of the best. We've done the research and narrowed it down to three top contenders: the Fidelity 500 Index Fund, ticker FXAIX, the Fidelity Total Market Index Fund, ticker FSKAX, and the revolutionary Fidelity Zero Large Cap Index Fund, ticker FNILX. These aren't just random picks. These are powerhouse funds, each with a unique strength, and we're about to break down exactly what they can do for you and your $10,000. First up, we have the Fidelity 500 Index Fund, FXAIX. Think of this fund as owning a small piece of the 500 largest and most influential companies in the United States. Companies you know and use every day like Apple, Microsoft, Nvidia, and Amazon. It's a classic approach, and for good reason. This fund tracks the S&P 500 index, which has been the gold standard for measuring the performance of large American companies for decades. When you invest in FXAIX, you're not just buying a stock, you're buying a piece of the American economy. You're investing in the innovation of Apple, the cloud computing dominance of Microsoft, the artificial intelligence revolution led by Nvidia. With an incredibly low expense ratio of just 0.015%, your money goes to work for you, not to fees. What does that mean? For every $10,000 you invest, you're paying just $1.50 a year in fees. That's less than a cup of coffee. Compare that to actively managed funds, which can charge 1% or more. That might not sound like a lot, but over 30 years, that difference in fees could cost you tens of thousands of dollars. Historically, this fund has delivered impressive returns. Over the past 10 years, it has averaged over 14% annually. The past 5 years have shown similar strength at 14.73%. Even looking at the most recent performance, it's up over 15% in the past year alone. So, what does that mean for your $10,000? Let's run the numbers. Based on its historical performance of 14% annually, a $10,000 investment could grow to over $37,000 in 10 years. In 20 years, that could be over $137,000. And in 30 years, you could be looking at over $500,000. That's the power of compounding in action. Next, we have the Fidelity Total Market Index Fund, FSKAX. If FXAIX is like owning the biggest players, FSKAX is like owning the entire team. This fund gives you exposure to over 3,800 companies, from large corporations to smaller, up-and-coming businesses. It's the ultimate diversification. This fund tracks the Dow Jones U.S. Total Stock Market Index, which includes nearly every publicly traded company in the United States. You're not just invested in the big guys, you're also invested in the small and mid-sized companies that have the potential for explosive growth. These are the companies that could be the next Apple or Amazon, and by owning a small piece of all of them, you're giving yourself a chance to be a part of that growth, wherever it comes from. This is a strategy that's favored by some of the most successful investors in the world, including the legendary Jack Bogle, the founder of Vanguard. He believed that trying to beat the market is a losing game. Instead, he advocated for simply buying the entire market and holding on for the long term. And with FSKAX, you can do just that. Just like FXAIX, the expense ratio is a tiny 0.015%. So you're getting that incredible diversification, that exposure to the entire US economy for next to nothing. The performance has been just as impressive, with a 10-year average return of nearly 14%. Over the past 5 years, it has returned 14.06% annually, and in the past year alone, it's up over 15%. So, how does your $10,000 fare in the total market? The projections are very similar to the 500 index. In 10 years, you could see your investment grow to over $36,000. In 20 years, that could be over $130,000. And in 30 years, you could be approaching that $500,000 mark. It's another fantastic option for long-term growth. Now, for our final contender, and this one is truly special, the Fidelity Zero Large Cap Index Fund, ticker FNILX. This one is a game changer. It has a 0% expense ratio, meaning you keep all of your returns. How is this possible? Fidelity is using these zero-fee funds as a way to attract new customers. They're betting that once you're in the door, you'll explore their other products and services. It's a bold move, and it's great news for investors. Now, you might be wondering, what's the catch? Is this fund not as good as the others? The answer is no. FNILX tracks a custom index that's very similar to the S&P 500. It holds over 500 of the largest U.S. companies, and its performance has been right in line with FXAIX. This fund is newer, launched in 2018, but it has already proven itself. Over its lifetime, it has returned over 14% annually. In the past year alone, it's up over 16%. The past 3 years have shown an impressive 19.95% annual return, and the 5-year average sits at 14.47%. So, you're getting the same exposure to the biggest names in the market, the same diversification, the same potential for growth, but you're paying absolutely nothing in fees. It's an incredible deal, and it's a testament to how competitive the investment industry has become. Because it's a newer fund, we don't have 30 years of data, but if we project its performance based on what we've seen, the results are just as exciting. A $10,000 investment could grow to over $37,000 in 10 years, and if it continues on that trajectory, it has the potential to reach those same incredible heights as the other two funds. We've thrown around some big numbers today, but it's important to understand where those numbers come from. They're not magic, they're the result of one of the most powerful forces in the universe: compounding. Albert Einstein is often quoted as saying that compound interest is the eighth wonder of the world, and he was absolutely right. So, what is compounding? It's simply the process of earning returns on your returns. When you invest, your money earns a return. The next year, you earn a return on your original investment, plus the return you earned in the first year, and so on and so on. It's like a snowball rolling down a hill. It starts small, but as it picks up more snow, it gets bigger and bigger, faster and faster. That's what's happening with your money when you invest in these index funds. Let's look at a simple example. You invest $10,000 and earn 10% in the first year. Now you have $11,000. In the second year, you earn 10% on that $11,000, which gives you $12,100. In the third year, you earn 10% on $12,100, which gives you $13,310. Notice how the dollar amount you're earning each year keeps getting bigger, even though the percentage stays the same. And the key to unlocking the power of compounding is time. The longer you stay invested, the more time your money has to grow. That's why it's so important to start as early as possible. Even a few years can make a massive difference in the long run. Let's look at our $10,000 investment again. After 10 years at 14% annual returns, it's grown to a respectable $37,000. But after 20 years, it's not just double that, it's more than triple, at $137,000. And after 30 years, it's exploded to over $500,000. That's the power of compounding at work. There's one more crucial piece to this puzzle that we need to talk about, and that's the power of reinvesting your dividends. When you own a stock or a mutual fund, you'll often receive dividends. These are small payments that companies make to their shareholders as a way of sharing their profits. You can either take these dividends as cash, or you can reinvest them back into the fund. And what do you think is the better option? You guessed it. Reinvesting your dividends is one of the smartest things you can do as an investor, because it's like pouring gasoline on the fire of compounding. When you reinvest your dividends, you're buying more shares of the fund, and those new shares will also start earning returns and generating their own dividends. It's a virtuous cycle that can dramatically accelerate the growth of your investment. In fact, over the long term, reinvested dividends can account for a huge portion of your total returns. Studies have shown that over the past 50 years, reinvested dividends have accounted for over 40% of the total return of the S&P 500. That's an incredible number, and it shows just how important it is to let your dividends work for you. All of the projections we've talked about today assume that you're reinvesting your dividends, and it's a crucial part of the strategy. So, when you set up your investment account, make sure you have that Reinvest Dividends box checked. It's a small detail that can make a massive difference in the long run. Now, we've talked a lot about the numbers and the strategies, but there's one more thing that's just as important, and that's your mindset. The stock market is a roller coaster. There will be ups and downs. There will be times when it feels like the world is ending and your investments are in a free fall. The 2008 financial crisis, the COVID pandemic crash in 2020, various market corrections, and it's in those moments that your mindset will be tested. The successful investor is not the one who tries to time the market, buying at the lows and selling at the highs. That's a fool's errand. The successful investor is the one who stays the course, the one who understands that over the long term, the market has always gone up, the one who has the discipline to keep investing, even when it's scary. That's why index funds are such a powerful tool. They take the emotion out of investing. You're not trying to pick the next hot stock. You're simply buying the market and holding on for the ride. It's a simple strategy, but it's not always easy. It requires patience, discipline, and a long-term perspective. But if you can cultivate that mindset, if you can stay the course and let the power of compounding do its work, you will be rewarded. You will build wealth. You will achieve your financial goals. and you will create a life of freedom and abundance for yourself and your family. So, there you have it. A comprehensive look at what could happen if you invested $10,000 into 3 of the best index funds that Fidelity has to offer. We've seen how a simple, low-cost, diversified strategy can lead to incredible wealth over the long term. We've seen the power of compounding, the importance of reinvesting dividends, and the mindset of a successful investor. Whether you choose the classic S&P 500 with FXAIX, the entire stock market with FSKAX, or the revolutionary zero-fee fund FNILX, you're putting your money to work in a smart, proven way. You're taking control of your financial future, and you're giving yourself the opportunity to build real, lasting wealth. Now, it's your turn. What are you going to do with this information? Are you going to let it sit on the shelf, or are you going to take action? The choice is yours. If you found this video helpful, please give it a thumbs up and subscribe to Frankie Finance for more content like this. Share this video with someone who needs to see it, and let us know in the comments below which of these funds you're most excited about. We love hearing from you and helping you on your journey to financial freedom. Thanks for watching, and we'll see you in the next video.